Everyone, so I just wanted to cover a problem in your homework, problem E621. The learning objective for this would be to apply the lower of cost rule to merchandise inventory. So in this problem, Claremont Resources uses the first in, first out FIFO inventory costing method. They have the following balances at May 31st, 2019, prior to releasing the final financial statements for the year. Here you have listed the merchandise inventory ending of 13,500. Cost of goods sold at 68,000, sales revenue at 123,000. Claremont has determined that the current replacement cost, current market value of the May 31st, 2019 ending merchandise inventory is 12,400. If you read the requirements to prepare any adjusting journal entry required from the information given, and then find what the value Claremont would report on the balance sheet at May 31st, 2019 for the merchandise inventory. So under the accounting conservatism principle, which is the principle in which accounting, where one exercises caution reporting items in financial statements, a business should report an asset at the lowest reasonable amount and a liability at the highest reasonable amount. A lower of cost market rule shows that accounting conservatism is in action. This rule requires that inventory be reported in the financial statements at the lower of the historic cost of inventory or the current market value of merchandise inventory. So here I'll be preparing an adjusting journal entry required for the given information. The ending merchandise inventory is 13,500 and the market value of the inventory is 12,400. As I mentioned, we're looking at the lower of cost market rule. We're going to report the lesser of the amount. So at the end of the period, when we record the adjusting entry to reduce the value to the current market value, we begin by calculating the amount of the adjustment required. We go from the value of 13,500 down to 12,400. To find the adjustment, I have to find the difference between the two. The ending inventory is 13,500, as I mentioned. The current market value is 12,400. The difference between these two numbers should be 1,100. As we prepare the adjusting journal entry, we need to reduce the merchandise inventory balance so it equals the current market value. We figure out that there's a debit and a credit, so we need a debit or credit to decrease the merchandise inventory account. When there's a reduction in the market value of an asset recorded, a company must also record an expense for the reduction. In this entry, we'll be thinking about carefully which account should be used, record a reduction in merchandise inventory, and whether a debit or credit is required to show the increase in expense account. So this journal entry, adjusting entry, would be a debit in cost of goods sold. That's 1,100. And a credit in merchandise inventory. The purpose of this entry is to write merchandise inventory down to the market value as I mentioned. So if I go here, that'll be a debit in cost of goods sold, 1,100. Credit, merchandise inventory. So now to requirement 2. What would the value Claremont would report on the balance sheet on May 31st, 2019? So look at details on this requirement. Keep in mind that when you recall that a business should report an asset at the lowest reasonable amount and liability at the highest reasonable amount, that we will be using the lower cost market rule. That's the rule I would answer using here. Reporting the using this rule, a company should report merchandise inventory on its balance sheet at the lesser of the company's costs for the merchandise inventory or the market value. Keep in mind, as I mentioned, Claremont has determined that the current replacement cost, the market value of the ending merchandise inventory, is 12,400. Therefore, we'll be reporting on the balance sheet the amount of 12,400, and that should be the. Let me see what's missing here. Oh, one more thing, the explanation. always need that for every journal entry. In this case, the purpose of this journal entry is to write merchandise inventory down to the market value. That is here, and that should be it. Okay, feel free to ask any questions on this problem. Any concerns on the homework, also the quizzes, feel free to ask me. I won't be able to assist you while you take the quiz, but I can always answer any questions post quiz attempts. So thank you for watching.